Good evening, guys. It's Saturday, April 1st. My name is Dave Coker, and this is Talking About Finance. Hey, ho, let's go. Hey, ho, let's go. This is an epic time. The end of a quarter, and after 2022, my gosh, we're all ready for some relief. And even those of us who invest only for dividends can't help but watch and observe the absolute carnage in the markets that was 2022, and dividend-paying stocks were not immune. But at least we have that buffer, that moat, which dividends and cash flow provides. A support for share prices, which works very simply. If we buy a stock for $10, which is paying a $1 a share dividend, our yield is 10%. Now, we carefully watch stocks before we buy, and we might realize that that stock always yields about 10% over a sufficiently long horizon. So we buy that stock. We love that stock. And we know that if there's a market crash when all share prices fall because of emotional, fear-driven selling, of course the price of our $10 a stock falls as well. But it doesn't fall as much. Remember, as price falls, if that dividend remains constant, yields rise. This is just the way the markets work. So will that stock yield 12%? Will that stock yield 15%? Will that stock yield 20%? If that dividend hasn't been cut, at the end of the carnage when markets bottom after the crash, that stock will still be yielding closer to 10% than 20%. Which means the dividend protects the share price from excessive falls. It's that emotional selling that I mentioned before. Sometimes people will buy stocks emotionally. And dividend payers also appear to be safe havens because they're stable, reliable payers of cash flow. And these are classic destinations of emotional capital. I've seen this scenario play out many, many times over the past 20 years or so of dividend investing. It's a style of investing that has helped me to become financially independent, and it can help you too. But before we get into the details, let's talk about finance. Because it's the end of quarter one, we're going to look at year-to-date quarterly results for the S&P 500. So the S&P 500 closed the quarter up about 7.03%. Three sectors outperformed the S&P 500: information technology, communication services, and consumer discretionary. And 8 sectors underperformed the S&P 500, specifically materials, industrials, real estate, consumer staples, utilities, healthcare, energy, and financials. It was a calmer week, slightly calmer week, but still a week when much happened. The VIX traded down to 18.30. It closed the week last week at 21.74. So again, guys, stocks are performing well, but that VIX, oh my gosh, it's a little odd. And there's lots of reasons to suspect this rally we're seeing might run out of steam as quarter two progresses. So be very careful building up new positions, considering the backdrop, the potential for a sharp sell-off in the markets. Again, guys, this is probable, especially considering how much risk, how much uncertainty there is in the system presently. The 10-year note closed the week at 3.47%. It's up 0.1%, 10 basis points week on week. It's down 0.4%, 40 basis points year to date. We're just going to leave interest rates where they are presently. Don't have much to say because there's too much going on to be able to forecast interest rates with the usual accuracy. Oil closed the week at 75.66. It's up about 9.2% on the week. And now down about 5.7% year to date. I don't get involved much with commodities, except, as you guys know, for gold and silver, and of course, Bitcoin. So we won't comment so much about oil. There's a lot of chatter about what might happen going forward. So now the end of the quarter is past, and funds that engage in what we call window dressing. Window dressing means They add the high-performing assets to their books so that at the end of the quarter they can report they hold winners. Now that window dressing is done, what are these funds going to do now? We're not totally sure. But watch for the ops in stocks, guys. You might already hold a position and dollar cost in. This is what I've been doing for a long time. And I do so consistently. I buy. I buy. I buy. That's just what I do all the time. Yesterday was Friday, and I know what you're thinking, and yes, you're correct. I did buy Bitcoin, and I did buy Ripple. It was Friday morning after all. Monday will be the first business day after March's dividends have been paid and received. So Monday I'll be buying stocks using not money I've earned, but dividends I receive from holding dividend-paying stocks. You can do the same, and I encourage you to do so. Build a passive income stream for yourself. Sit back, collect dividends, get rich slowly. It's the only way to be sure. Trading does not work. So now let's see what me and my buddies, money freaks, all of us, have been talking about all week. We are Global Wall Street. We're in the city of London. We're on Wall Street itself. We're in Bankviertel in Frankfurt. We're in La Défense in Paris. We are absolutely everywhere. And everyone in our group either knows someone or knows someone who knows someone. So jobs, references, yeah. We do a lot of that off the record on the Telegram channel. We've got our fingers in absolutely everything. We talk all week on a private Telegram channel about the markets, about events, about people. And this evening we got 7 slides for 7 days. So let's go. Now, you know, have you ever woken up after a bad dream and you sort of thought relieved to yourself, my God, I thought it was all a dream. I thought it was real and it turned out to be a dream. Yeah, I like to think that I'm going to wake up from this mess. This is a wonderful infographic. I'm not sure who made it, or MAME, I should say. I'm not totally sure. But think about micromanaging professors. Think about that. Yeah. Think about this. So we're not totally sure what's going on with the economy. We sort of know who's in charge, but what's their background? Do they have our best interests at mind? I don't think so, guys. We see this repeatedly throughout the decisions that they make. They make all sorts of idiotic decisions. They allow all sorts of mismanagement to happen to the U.S. economy. This is one that is really, you have to be aware of, and I watch this stuff. Wonderful meme. I'm not sure where this came from. It appears, I have to ask the guy that put it up there. It might be Bank of America research, but I'm not totally sure. It might be Goldman as well, just judging. It doesn't really matter. Somebody removed the watermark. But regardless, look at how long it took America to reach $7 trillion in debt. And then look at what our elected officials did to add another $7 trillion. It's absolutely amazing when you look at this. And people ask, how am I going to invest to not only survive, but to thrive? Well, you know, he didn't say this, but I'd like to look at his personal investing record if I could. Guys, I make no secret of the fact that I moved 71% of my retirement money into gold and silver in March of 2019. If you go back on this channel on February 25th of 2020, I mentioned I was building up that position. I've got a lot of money in gold and silver right now. An awful lot of money invested in metals. Yeah, I've seen this play out with the bump that we had in 2004 and 2005 when metals were severely underpriced compared to what I saw going on with the U.S. economy. I bought heavily, and by 2014, I had sold all the gold, sold all the silver, paid the taxes, bought 4 houses, paid cash, and I'm going to do it again. But you know, Americans, our expression is just like the last time, only better. Yeah, definitely going to happen. It's really interesting. You can tell people who have all their money in fiat and people who tend to invest in tangible, real, physical assets. Stuff I've been advising you to buy for a long period of time now. Property. Silver. Or as this slide talks about, gold. If you buy gold, if you're holding gold, you'll notice something very unusual. When you look at the price of assets, remarkably stable when priced in gold. They go up, but not as much as they do in fiat. Why? It's that debt that we're talking about. All that debt they took on that weakens the U.S. economy. And it causes carnage. Now, they're trying to raise interest rates, of course, to deal with the problem they've got with inflation, which really was caused by all the money they handed out during the pandemic. They distributed some $6 trillion to anybody who wanted it. I got money from them. I didn't want it. I didn't ask for it. I didn't need it. I got it. So it just shows you, if people like me are getting money, everybody's getting money. And what did most people do with the money? Well, they spent it, or it's sitting in the bank account and they're spending it now. What'd I do with that money? Yeah, you already know what I did with that money. Dividend paying assets, some gold, some silver perhaps, a few other things as well. It's really interesting because now that they've raised interest rates so much, we know that banks have what's called the asset liability mismatch, the maturity mismatch, I should say. We know banks have this big problem where they borrow on the short end, so their liabilities are short dated, but their assets are long dated. They invest for the long term. And as interest rates go up, the market price on fixed income assets falls. It just does. This is how it works. And look at this. This is off some, pretty sure this is Goldman research, not totally sure. People have been getting a little paranoid on the Telegram channel because they work for these banks. And some of the stuff that's on these slides hasn't been released. And so what they're doing is they're watermarking and stripping off the logos. I don't care. I don't blame them. This is all legitimate stuff, guys. You can look this up. This is verifiable from other sources. And you can see what's happened. Now, this has gotten people on Twitter, the usual idiots who really don't know much. There's a bunch of academics on Twitter that don't know squat, unpublished professors, people like that. There's other people that don't know squat, the people that just got into investing a couple of years ago. And these people are making a lot of noise about this, and they're talking about the death of the U.S. financial system, blah, blah, blah. They haven't been in the markets that long. I'll tell you something very simple. The Fed, the politicians, they don't care about you or me. They care about the financial system and the dollar, and they will do anything to protect it. And the fact that Jerome Powell says we're going to continue raising interest rates until unemployment soars tells you something. I don't have much time for some of the politicians in the States, but Elizabeth Warren, who I don't really care for overall, she is spot on when she goes after Mr. Powell for suggesting that unemployment really has to soar and maybe approach 10% before inflation will be out of control, or probably under control. So yeah, don't worry about it. They're going to protect the banking system. They're going to protect the dollar. It's just a matter of how much carnage will be wrought before then. But there is something you can do, guys. We've talked about this many times. I've been buying Bitcoin every Friday for literally years. I don't buy one Bitcoin. I don't buy half a Bitcoin. I spend the same amount of money every week. I don't even look at the price when I get up on a Friday. And you know I'm up and about 4 a.m. American farm boy. Lots of energy. Chickens got to be fed. Cows got to be milked. I just wake up without an alarm. I'm ruined. You know, grew up on a farm, worked in investment banking, worked with the U.S. military. I'm totally ruined. I can't sleep in if I want to. I just wake up. But regardless, I tend to buy Bitcoin around 5:30 on Fridays. I just do it automatically, the same amount of money every week for years. And look at this. We see these breakouts. These correspond with the halving cycles, guys. We've talked about them before. Now, people that produce charts like this is from a guy called Crypto Noob. I don't know the gentleman or gal. I honestly don't. Just a meme that somebody put up on the Telegram channel. We talked about it. We talked it to death. But you can see the theory here is we're entering another breakout. It's entirely possible. What are you going to do? Are you going to sit there with no Bitcoin? You're going to sit there spending your money? Well, guys, plan accordingly. I didn't do this. Don't blame me. I do think it's funny, right? Here we go. I'll probably get a lot of DMs that are hostile. I don't care. I'm just going to read this. I didn't create it. So there's 3.9 billion women on the planet, and there's only 21 million Bitcoin. You can get a girlfriend later. Spend your money wisely. Okay, guys, that's it for this evening. You're going to have an absolutely wonderful week. Just make sure you invest. Buy some stocks, buy some bonds, buy some Bitcoin. If you're really, really liquid, if you've been running the numbers, yeah, go for it. Go for it. Buy a property. I'm about ready to close a deal in Hartlepool for another flat in a building where I own a penthouse now. Wonderful market. A lot of people being scared. They're afraid. They're selling. They're asking stupid money. They're making emotional decisions. Just sit back, run the numbers, plan accordingly, buy that stock, buy that bond, buy some Bitcoin. You can get a girlfriend later, or a boyfriend, or a partner, doesn't matter. Plenty of time. Take care, guys. Oh dear, I love this tune.